What is going on, guys? My name is Family Shucks and welcome back to another video on me trying to learn options. So as you guys might not already know, I am trying to learn options, and I'm doing this by starting off really basic by selling cash secured puts and covered calls. Now I like to buy and hold my shares for the long term. However, the reason I decided to get into options was to just increase a little bit of excitement in terms of investing and also increase my knowledge in this whole stock market realm, and at the same time, make a little bit extra cash based off of the premium and try and increase the returns on my overall portfolio. So last time we left off, I was actually talking about the few trades that I've done in the 1 month of September since I started. I first started off by selling a covered call on net for a decent premium of $15 or 15 cents in the options lingo, and then also a CSP on Bank of America and a CC on net. And when I edited that video, I was kind of debating whether or not I want to BTC or buy to close the contract on net that I had that was so deep in the money, because at the time when I sold it on September 21st, it was trading at a price of around $37, and I thought the strike price of $42 was well out of the money at the time. However, for some reason, over the course of those 2 weeks, Cloudflare continued to steadily rise up, and I think as of this week, it broke through like crazy. It shot through the moon due to its announcement of Cloudflare 1. Now, I did not anticipate that at all. I don't have any insider information. So, unfortunately, that contract was so deep in the money that it would have costed, I think it fluctuated between $1,500 to $2,000 just to close that contract. And at the time, or actually this morning, I was very much debating whether or not to buy to close that contract and just roll it out further another month. However, still in the money at around $43. Now, the reason I thought this was a good idea at the time, and maybe looking back, I probably should have done it if I wanted to keep my underlying shares, but the reason I thought about this was not only would this allow me to keep my shares an extra month, but I could also roll for a little bit more credit and also for a higher strike price by $1. So I'm going from a $42 strike price to now a $43 strike price, and I probably would have netted around a $30 to $40 credit for that. And looking back, I think that probably would have been a good idea, because not only would I have been able to roll for a slight credit, but I also could roll it up and also out in order to keep my shares for a little bit longer, because ultimately, looking at this recent run up by Cloudflare, I thought this was really overextended and it was bound for a pullback in probably the next 2 weeks. Now, it was already showing signs of some pullback towards the end of this week, and I think that would have been a slight signal for a little bit of a sell-off in the next coming weeks. I probably should have rolled up and out this morning, but fuck it. It's all a matter of learning. I can't be too emotional or too tied to my stocks, because that might lead me to bag holding, especially if the stock is going down the gutter. So I think testing myself and letting my shares get called away is a nice slow way to remove the emotional tendencies I have towards hoarding my stocks and keeping every single bit for myself, but understanding in the long game it's not really going to matter, especially if I'm making some nice returns. So with that being said, what is my next play? Because I'm freeing up a bunch of capital after this contract is being assigned. I'm going to be freeing up around $4,200 plus around $1,800 from my savings account, because I did mention from my last episode that I'm planning on moving my savings account money, or a little bit of it, into my brokerage account, so that way I can make a little bit better returns on my money, because savings accounts, high yield savings accounts now at this time, their interest rates are really shit. It's like 0.6%, with the free capital that I'm going to be having at the beginning of next week, I plan on entering 2 small trades, 2 weekly trades that may or may not be the wisest decision, but like I said, this is a chance for me to learn as long as I'm not losing any sort of crazy money. Now we can walk through the 2 trades I'm going to be entering at the beginning of Monday when the market opens. The first one is going to be Rocket. I'm going to be selling a CSP that is going to be expiring that same Friday on 10/23, and I am planning on selling it for a strike price of $21.50. Now before I jump into the technicals that I've been kind of experimenting with and familiarizing myself with, overall I think Rocket is a decent company. It seems to be a meme stock obviously amongst everyone, but I do think it has a lot of potential in the long term. So I think my mentality right now is still sticking with companies I would want to hold for the long term, but also experimenting with other companies that I wouldn't mind selling out of after maybe say 1 to 3 years. And I think Rocket might be one of them, depending on how much more I like Rocket. It's one of those companies that I haven't really done that much research on, but I know it's been showing some pretty decent numbers from what I've seen, so I'm not too hesitant on dipping my toes into Rocket. It also has a lot of volume, a lot of people are trading this company, so I'm not too worried on not being able to fill or exit any of my orders. Now with CSPs, I'm not trying to get assigned. I'm going to try and collect as much premium as I can before assignment. And you might be wondering, why then am I selling a CSP at $21.50 when Rocket closed at $21.91 and has been on a big downtrend this entire week? So ever since I've kind of started trying to get into options, I wanted to start learning a little bit of technicals. So I got the basics with the 250 moving average. The purple line is indicating the 200 and the turquoise is the 50. And then I also got the MACD and the RSI. Now I could also be doing the VWAP, still trying to see what indicators are good for me and what seems to work for the basic needs that I have, and so far these indicators have been doing just fine for what I know. Obviously, as I grow more experience and grow a little bit more in my knowledge, I will obviously change these indicators over time, or I may keep them, who knows. But you might be wondering, going back to the point, why am I selling at a $21.50 strike price? Now, looking at the 15-minute chart, we can see that overall this week has been on a downtrend, and you can see this red line right here that I've indicated before. And that's because before, when I was looking at a more longer term time frame, aka the 10-day window, you can see a bit of, I guess you would call it, consolidation around this area that I see right here, around the 2160 price range. And what I feel is that next week they might test this 2160 consolidation line and then bounce back up. And if we kind of switch over actually to the after hours, you can already kind of see that the trend is going up. And also the MACD and the RSI, from what I've seen, they kind of indicate the same thing, is that momentum is kind of turning towards the upside. So what I'm thinking is that if anything bad happens, kind of going back to the 10-day chart, the lowest it might go if anything bad happens next week is $21.50, and the price will probably test that area of consolidation in the next coming days. But I guess longer term, if I want to play something more longer, I think if I want to do a more 30 or 45 DTE, I would probably set a price range of around $21, maybe $20 if I want to be super safe, because obviously that seems to be where the bottom is in terms of the 20 days. And I guess if I wanted to be a little bit more greedy with my premiums, I would probably be safer or more comfortable putting it for a $21 strike price and collecting a little bit more premium. But in terms of a shorter term expiration, I'm kind of much more comfortable setting it at this area of consolidation at $21.50. And if I do get assigned, it's something that I'm comfortable being assigned for, and I wouldn't mind selling covered calls on it. So that's kind of my justification for why I'm going to be selling a 2150p CSP on Monday. And obviously the premium is going to probably change on Monday morning depending on how the stock opens, but for what it's worth right now, it's saying that if I sold a 21.5 CRSP right now, it would give me a premium of $43, and I think that's a pretty decent return, especially for the cloud that I'm putting up of around $2,100. I think that's probably around a 2% return. Not that I'm really chasing returns, more or less premiums, and just not trying to lose money, but I think it's a pretty nice premium for just a weekly. Now the next one I'm not really going to go too in depth into just because it's very known already. It's Bank of America. I'm planning to just use the extra cash that I have out of the 6,000 to sell another CSP on Bank of America at a strike price of $23. Now for this one, I'm not really trying to chase premium for this because, like I said before, I'm not really trying to get assigned on this contract. However, if anything bad really does happen, I would be really happy to buy it at $23 just because my cost basis is already close to $23 at around $22.89, so $23 wouldn't really be that much of a difference, and it is something that I would be glad to hold for the long term and collect their dividends. So for this one, I was just collecting a little bit extra premium with the $7, just utilizing the extra cash on hand. So out of the $6,000 that I will be having on hand on Monday or next week, I'm using about 67% of that cash in order to sell some puts Monday morning, and ultimately I could use the full 6,000, but off the chance that anything goes wrong, I would like to have a little bit extra cash to BTC any of the contracts in case they turn against me, because I think lesson learned from my covered call on net that I am going to be assigned on is that if I am going to be selling longer term contracts, I have to be a little bit more active in terms of my management in case the trend of that contract is going against me, because in the case of net, it was on a constant uptrend since I sold it, and what I should have done is that I should have seen that, recognized that the trend was kind of going against me, and ultimately making the decision at the time that if I wanted to keep the underlying shares, I should just buy and close it right away and potentially roll it out, or just close the contract altogether at most likely a slight loss. It would have been way cheaper to buy the contract back a few weeks ago rather than now after it's already blew past my strike price and making me well deep into the money. So with all that being said, hopefully I'll be able to collect a nice premium of $50 next week, and over time, as the premiums start to rack up, that'll also increase my buying power, and also I have regular deposits coming into my account weekly, so hopefully now I can start to delve into more contracts and collecting more premium, and maybe that will allow me to run the wheel strategy a little bit more effectively as I have more cash on hand. So I didn't really want this to be a big ramble of a video, but I think ultimately it did. But this is, kind of the learning curve that I'm slowly undergoing when it comes to selling options and trying to familiarize myself with data gain strategies. Not all of this is going to be learned overnight. I already made a few mistakes along the way, and that's good that I'm getting hands-on experience in order to experience it, and also so I know it and so that it's ingrained into my brain. But yeah, that's about it. Thank you guys so much for watching if you made it this far, and I will see you guys with an update next week. Peace.